Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update on Sunday, May 19th, 2019, looking ahead at the week coming up of May 20th. And I thought it'd be helpful to just review, kind of what's the big picture, what's going on that could affect the market. So I've got a handful of items here that I think are on everybody's radar, but I wanted to summarize them here. So, number one, the China trade deal is still up in the air. That lack of movement on the China trade deal caused some volatility over the last couple of weeks. And there's really nothing planned until the G20 summit in Japan in June. But of course, news can break. There can be headlines that could cause the market to move either way. But that's still in play. Late last week, announcement that the steel and aluminum tariffs that have been put in place about a year ago are being lifted in the next couple days, and looking for USMCA ratification or replacement for NAFTA. So any breaking news on that, and certainly want to watch steel and aluminum stocks and see if there's any opportunities there. Of course, tensions with Iran ratcheting up, really starting last week. And we should expect to see some reaction in oil prices. And we can see here, looking at the oil futures chart, 10-minute, the overnight session that just started about an hour ago. Pretty big jump up in oil, about 1% jump. And if we look at oil on a bigger time frame here on a daily chart, you can see oil pretty much most of the year has been climbing up steadily. We had a bit of a pullback here. And you can see we got the this is a daily chart. This is the 200-day moving average. This is the lighter line is a 50. And you can see we came right down to where the 250 were, right at the cloud, and it reversed, found some support, and is heading up again. And we had the 50 cross over into what's called a golden cross. So looks like some more bullishness, some more increase in oil. And given this move and this pullback, it gives us a target up between 73 and 81. With the prior high from last year being the midpoint. So looks like, increase in oil. So that could be tradable. And then the S&P 500 is trading in a volatile range, and that is likely to continue. So here's a daily chart for the S&P 500. Kind of hard to believe that just a couple weeks ago we put in an all-time high on the S&P 500, although it was pretty weak, very close to the prior high, but it was a new high. And since then, with the China trade tensions, there was a pretty sharp pullback, and now we are in, a pretty pronounced channel. Let me blow this up and draw a couple lines to highlight this channel that we are currently trading in. Draw an upper boundary line right here, and then a lower boundary line here. And so this channel, the upper boundary is 2891, lower 2800, so about a 90-point channel on the S&P 500. And unless there's a breakthrough on any of the kind of the big ticket items, we should probably expect for a while to continue. Now, if it breaks out of this channel either way, there's probably going to be some follow through, maybe to new highs if it's the upside, and if it's down, then some more lows to come. So we'll be watching this channel pretty closely. And so that's kind of the big picture. Coming up this week, we've got some important kind of bellwether retail earnings. We've got Home Depot before the open on Tuesday, Lowe's and Target before the market open on Wednesday, and Best Buy before the open on Thursday, and then the release of the FOMC minutes on Wednesday at 2 p.m. Eastern Time. So those are kind of the big deals to keep an eye on. And again, we're going to watch this channel on the S&P 500 very closely, see if it breaks out. There are trading opportunities out there. It's a little tougher. It's easier to trade when the market's trending up or down. When it's channeling, you have to really dig deep to find good trades. But they're out there, and we've got a couple going on. So that is it for this week. And as always, welcome you to leave your comments, your feedback, questions. And as things develop, we'll continue to provide updates. All right, thanks.